Today I thought I should give you an idea of the potential chain of reactions and effects on different markets due to the US debt downgrade. With this downgrade, several questions arise. So what is going to be a future direction of the US bonds? And what we're seeing here is the last 2 decades of the US bonds. And number two, we will also study about the impact on US dollars and the rest of the currency. We're going to discuss about the relationship between the bonds, the US dollars, and the other currency that is against the US dollars. And number three, we're going to discuss about with this debt downgrade, what will happen to the inflation. And before we discuss about this topic, please do take some time to read into the disclaimer down here. Let's go to point number one here is what will be the future of the US bonds. Let me just give you a recap here. On the 2nd of August, Fitch rating agency cuts its US debt of bond rating from AAA to AA+. Now, first, let's define what is a bond. A bond refers to a borrowing arrangement based on trust, when the principal amount is agreed upon to be returned in full, along with its regular interest payout to its investors after a specific time. So what happens when a rating is being downgraded? This also means that the quality of this trust is being discounted. Therefore, with this downgrade, it is highly likely that the future price of the bonds will be heading downwards. And this was a study made about slightly more than a year ago. We saw that it broke this uptrend line, and likely with this downgrade, it's going to head further down. Now let's take a look at why then about a year ago I made this observation, and this was posted on the published video, and the title it was US bonds is major uptrend has been broken. It was published on the 8th of July 2022. Now let's take a look back then. So we study about this uptrend line. We have studied how to draw this uptrend line. And then in July, my observation was that it has broken convincingly technically. And based on this, we suspect that the US bonds may be having some volatility in some months ahead and should be heading down. And let's look at the end result for the US bonds. And with this fundamental news, we have a reason to believe that the US bonds have more downward pressure to come. Now let's take a look at the point number two here is that what will be the fate of the US dollars and the currencies. Now, first of all, let me explain between the relationship of the T-bonds, the US dollars, and the rest of the currency that is against the US dollars. Now, first of all, with the understanding that maybe the US T-bonds is heading downwards, now we have to understand that US bonds is priced in US dollars. As investors sell or offload the US T-bonds, it also refers that the likelihood of the weakening dollar, it will be there. Between the currency pairs and the currency futures, now this is what happened here. The complication is that on the currency pairs, for example, if we're trading the dollar yen, if we're seeing dollar yen is heading upwards, it means that the US dollars is strengthening and the yen is weakening. I know there's some confusion here, and usually I would like to trade the currency outright futures. This means that when I'm seeing that yen is moving down, it means that yen is weakening. When I'm seeing that British pound futures is moving up, it means that the pound futures or the pound currency is strengthening. It's as outright as this. Now, in this context, I'm seeing that the possibility that the future of the US dollars is heading downwards, it means that the rest of the currency that against the US dollars should be heading upwards. But I have a little trick here is that I would like to base on the debt to GDP ratio. According to trading economics, this is what I gathered. And the higher the debt to GDP ratio against the US dollars, I'm seeing that the future of the currency futures will be heading down. For example, the US debt to GDP ratio as of December 2022, it was at 129%. But Japan debt to GDP ratio is more than the one of US. And I believe that as the bond is down, US dollars should be heading down. But since the Japanese debt to GDP ratio is higher than of the US, and I reckon that the yen futures will be heading down together with the US dollars. How about the rest? The pound, the euros, Aussie, Swiss, and Canadian futures. I wanted you to take a few seconds to observe the debt to GDP ratio together with the US debt to GDP ratio. And they are of a better rating. Now, you have observed that the pound over the last few months, as US dollars moving downwards, pound futures has been moving up. So is the Euro futures, and so is the Aussie futures since about 2 years back. And so is the Swiss and the Canadian futures as well. Let's go to the third point here is that the inflation numbers. With the debt downgrade, what will happen to the inflation? Now, a weakening US dollars results in an increased cost for many of the imports into the US, thereby raising the risk of inflation. So what do you think? Are you seeing risk or opportunity here? And my answer to that is that if I know there's a potential risk lying ahead of us, I am seeing opportunity. And that's what we're planning here today. I always enjoy studying the correlation between the markets and to uncover potential opportunities. And I hope today's sharing it will be helpful in how we invest and trade. Feel free to leave me any comments below. I'd love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.